Hello, welcome to M Trading Professionals. This is Mimi FS. We are still on basic course 4 and we are treating Forex lot size. So the question is, what is lot size? I believe you currently understand what PIP means, the concept of PIP and pipette, because we treated it in our previous in the previous video. We talked about PIP and pipette. PIP is four numbers or two numbers after the decimal, while pipette is three numbers or five numbers after the decimal. We did some calculations, but then I said you don't need to really disturb yourself with those calculations. All you just need to do is understand the concept of PIP and pipette, because often you hear take a trade, someone could want to give you a signal. It will be like, buy now, take 50 pips PIP, take 50 pips stop loss, rather take 50 pips take profit, and things like that. So if you don't understand those concepts, you will be you won't be able to meet up, you won't be able to follow up adequately. Okay, so that's just why you need to understand that the basic concept of PIP and pipette and all that. So straightly, we are talking about lot size. Lot size, of course, is a contract that we use to describe the size of a trading position with reference to units of currencies. Okay, so lot size is the volume that is traded, is the volume that determines the size of our business. So when we look at the volume, okay, why someone is trading with, let's say someone is trading with 10 lot size, which is $100 per pip. Another person could be trading $1 per pip. The other person could be trading $10 per pip. Someone else could be trading $50 per pip. Someone else somewhere could be trading $200, $500 per pip. Okay, now it's all about your equity. Your equity is what determines the lot size you are supposed to trade, the volume you are supposed to trade. Just like in conventional business out there, people have different amount of investments. So the amount if we are into car business, I could have actually put in 100 million, while someone else are putting 1 billion. You know, so we don't have the same size of business. We're into the same business, but we're not on our purchasing power is not the same. So PIP is like your purchasing power. Of course, that is what exposes you. That's what determines the risk exposure you have in the market. The higher the PIP, the higher the risk, of which it implies that it's going to be higher reward as well. So if you are trading with a $10 per pip lot size, you are trading a $10 per pip, and someone else is trading $1 per pip. Even if we make the same amount of pips, because we are trading $1, we are one person is trading $1, the other person is trading $10, they will end up making different amounts. When someone closes with $50, the other one could close with $500. Okay, so let me share, like I often love sharing. I have a special material I have for this, but let's just look at these types of people. Normally we have 4 types: nano lot, rather types of lot size. We have the nano lot, we have the micro lot, we have the mini lot size, and then the standard lot size. Okay, so the micro lot size, I won't be talking about the nano lot size, but the micro lot size ranges from 0.01 to 0.09. Mini lot size ranges from 0.1 to 0.9, and the standard lot ranges from 1 to infinity. Okay, let me share that document and let's go ahead with it. So here I said lot size is the volume or amount traded in the forex market. Leverage margin is percentage. Okay, I'm not going to leverage margin. Then this table shows us stuff. Now, lot size, of course, is like, you know, it has to do with the unit of currencies you will be able to buy or sell. Okay, so this is just an example of a business out there, 100 units. This one, an investor has 100 units, another investor has 1,000 units. You know, so why this one is investing 100K, the other one is investing 1 million naira. Even though they make 100% profit, it's going to end up having extra 100K. This one is going to have 1 million naira profit, so they can't make the same profit. Of course, when there is risk, when things don't go as planned, the second person, the one who actually invested into purchasing 1,000 units, will lose more, because the risk is higher, the reward also is higher. Okay, All right, all right, all right. So straight, we move ahead. So look at this example of lot size and units of currencies traded. Euro USD, for instance, euro is the base currency, USD is the quote. Now take note, whenever we are buying or selling, anything we are doing is with reference to the base currency. So if I click buy, I'm buying euro. If I click sell, I'm selling euro. And if I'm buying euro, it means I'm selling USD. If I'm selling euro, it means I'm buying USD. Okay? Okay, just see yourself with your 2 million naira, you know, and you want to buy a car. Just look at yourself with your 1,000 pounds and you want to buy a car. So you give them the money, they give you the car. You sell the money, you buy the car. Now see yourself with your car and you want to sell it for $5,000. Okay, so you are selling the car, you are buying the money. They are giving you $5,000, you are buying the money and you are selling the car. That's just exchange. That's why we say foreign exchange. Okay, so the lot size here, if it's one, it's with reference to the unit of euro that is purchased. So one lot size means 100,000 units. You can see here, 100,000 units. One lot size. Okay, I'll talk about the other one. So one lot size in units means 100,000 units. 0.1 lot size means 10,000 units. 0.01 lot size means 1,000 units. Okay, so if I do 0.05, it's in between this range. 0.05 means 5,000 units. Then if I do 0.07, it means 70,000 units. It falls into this group, into the mini lot. So micro lot is 0.01 to 0.09. Mini lot is 0.1 to 0.9, and then standard lot is from 1 to infinity. So if I open 20 lot, it's standard. If I open 1.3, it's standard. If I open 6 lot, it's standard. If I open 20, it's standard. So if one lot size is 100,000 units, 10 lot size will be how many? Will be 1 million units. 1 million units. Okay, so look at it. USD JPY 0.3 lot size. If I'm trading USD JPY at 0.3 lot size, it means what? 30,000 units of USD base currency. Okay, if I'm trading New Zealand dollar versus the AUD dollar at 0.07 lot size, I'm trading 7,000 units of New Zealand dollar. Okay, take your time, listen to the record again, and take your time to digest this. Now, something is still remaining, which is this amount per pip or lot size. So look at this formula. Remember, you are not going to be calculating all this. The system calculates it and shows it to you, but we just try to explain how they work and how you can arrive at them. So amount is equal to lot size in dollar times pips. So if you make pips subject of formula, it becomes amount divided by lot size in dollar. So how do we get lot size in dollar? Multiply the lot size by 10. So if this is my lot size, if I multiply by 10, I will get this. Can you see it? 0.1 times 10 gives us 1 lot size. 1 times 10 gives us 10 lot size. 0.01 times 10 gives us 0.1 lot size. So if I trade 0, I think there should be some calculations there. So let me just do it so we'll be seeing it. So where lot size in dollar is equal to blah, blah, blah. So to get the dollar equivalent of lot size, multiply that lot size by 10. I've just mentioned it. So thus, 5 lot size is equal to 5 times 10, $50 per pip. 0.5 lot size, change it to dollar, equal to 0.5 times 10, that is $5 per pip. And 0.08 lot size, multiplied by 10, you have 80 cents, which is $0.8 per pip. So the first one here is a standard lot. The second one is a mini lot. And then the last one is a micro lot. So look at this example. If a trader opens a position with 0.2 lot size and makes 350 pips profit, how much did he make? You see, pips coming up, lot size coming up. So a trader opens a position, whether buy or sell, and he opens 0.2 lot size, and then he makes 350 pips profit. How much did he make? Answer using the formula above. Of course, we know the pip now, we know the lot size. Therefore, so first thing we do, we have to convert the lot size to dollar. Multiply by 10, it means $2. It means $2. Okay, so what's the formula up there? Look at the formula. To get the amount, we are trying to look for amounts. Just lot size in dollar times pip. So already we've gotten the lot size in dollar, which is $2. Just $2 times this one. This is $700 profit. Okay, the next one, if a seller sells a security at 1 lot size and loses 20 pips, how much did he lose? one lot size, he loses 20 pips using the formula above. So 20 pips, one lot size. So firstly, multiply 1 by 10. That's what we did. So we have $10 and then multiply $10 by 20. You see it, lot size. Okay, I shouldn't call this lot size again. It's now lots of rather 10 lot size in dollar. Okay, times 20 pips will give us $200 loss. So that's it. That's it. It's just as simple as that. Okay, let me see if there is anything in case you don't understand, but I guess we've been able to do justice to that. So remember that lot size is the volume that is being traded, and then we have the micro lot, the mini lot, and the standard lot. Okay, that's the summary of it. And then, of course, anything 0.01 to 0.09 is micro lot, and then whatever anything 0.1, anything 0.1 is mini lot, and then anything 1 is standard lot. So you already understand it. So to convert it to dollar, just multiply by 10. So this is 0.0, this is 0.10 dollar. Okay, this equals $1, and then this equals $10. Okay, so to get the amount, if I traded, let me just quickly do this. If I traded 0.0.15 lot size, and I made a profit of 100 pips. So how much did I make? 0.05 times 10 first. Remember, you're not doing all this, so you can just discard it. Multiply by 10 equals $15. Sorry, $1.5. $1.5. So 100 multiplied by 1.5, that's $150, if I'm not mistaken. If I'm not mistaken, I just hope I'm correct. Okay, so that's just how it works. So the lot size is like, that's how I do explain it. Okay, the pip is like quantity. Okay, all right, I'll write it down now. The pip is like quantity. So pip is quantity, while lot size is price per quantity. If you also understand it this way, it would. So if you want to know, just multiply quantity by the price per quantity, you are going to know the amount. Very simple. Okay, all right, just let me just share a chart and then show. Let me just share a chart. Sorry. Let me just share a chart. Okay. Okay. So right here, right here, right here. Look at it. New order. Can you see the volume? Can you see volume? Because it's 0.1, it says 1,000 euro. That's unit. 0.1, sorry, 0.01 is 1,000 euro. 0.1 is what? 10,000 euro, the base currency. Then if it's one lot, 100,000 euro. Let's change this euro to, let's change it to anything USD. Let me change it to pounds. So it changes it to pounds, one, you know. So let's also change it to a USD JPY. Change to USD. Understand? Let me put 10. You see 1 million USD, 100,000 USD. So this is where you put your stop loss. This is where you put your take profit. So you need, and this, remember the difference between, this is the current price now. The difference between the current price and the stop loss is in pip. The difference between the current price and the take profit is in pip. So if I put, if the difference now is 50 pips and I trade with one lot size, when the market close, I'm going to get approximately $50. Sorry, $500 because this is one lot size. If the stop loss is 200 pips and the market hits my stop loss, I'm going to get, if the market closes and I'm trading one lot size, I'm going to get approximately $2,000 because 1 times 10 is 10, 10 times 200, $2,000 will be the loss. Okay, so that's that. I believe we got value. If you got value and you've not liked, you've not subscribed to this channel, kindly do that. Also, try to visit our website on www.mtradingpro.com. Also, follow us on other social medias. Ask us a question and we'll be there to answer you. Thank you and enjoy the rest of the day. Bye.